Hello, this is the Trading Guide, and today I want to give you a few tips for trading the engulfing candlestick pattern. In a previous tutorial I already explained how the engulfing pattern looks like. In the bullish engulfing you have a green candle that is totally covering a smaller red candle. It is a sign that the buyers are currently in control. The opposite is the bearish engulfing, where a red candle is covering a smaller green candle, and it seems like that the sellers become stronger. Okay, so we know that, but you shouldn't always enter when you see such a pattern. You should take trend, market structure, especially levels of support and resistance into account. Okay, so let's have a look at an example. Here we have the Australian dollar USD chart on the 1 hour time frame, and I added the higher highs, lower lows indicator to the chart. With these settings here, I don't want the bar color to change, and I disable the labels. I just want to see the lines for the highs and the lows. I also added a 20 EMA, an exponential moving average, to the chart so that we can better see the trend. So let's see, price went down here, forming a high with this wick, and then we have some consolidation followed by a bullish engulfing with a very strong bullish candle. Now you can ask yourself if this is a good entry. Well, no. You see, this candle is closing at this high here, which can be seen as a level of resistance. We could enter at a retest of this intermediate high, but that's another story and shall be told another time. But let's move on in this chart and see if we find a better entry. Now price is going down again, it's below the 20 EMA, and then I see a nice bearish engulfing. Now let's have a look at the market structure. We are at a previous level of support. So I draw a rectangle here. And we also see a rejection of this zone. The wick tells us that the price rejected to go higher, and then we have this bearish engulfing, strong indication that price is going down. So I would enter this trade here, stop loss at the high of the previous candle, and the take profit I plan to the previous low. And the trade is successful with a risk to reward of 1 to 1.8. But if you wait for the next candles to close, you can make a profit of about 1 to 3. Okay, now let's have a look at a bullish example. Here we can see price is coming above the 20 EMA and a bullish engulfing. This happens at a level that had been resistance before. You see this rejection wicks at this zone, but then it is broken. And the wick of the bullish engulfing candle taps again into this zone, rejects it, and this is another indication for me that the price is going higher. So we can enter the trade. Stop loss I set to the previous low. And then we see deceleration in this trade. At around this level the candles are getting smaller, but we can stay in the trade for a risk to reward of about 1 to 1.5. Okay, a last one. For that we also have a level here of support. Many wicks, rejections at this level. And then price is breaking above a previous high with a strong bullish engulfing. Quite nice, but what bothers me here is that the candle is very strong, very big, and if I'd set my stop loss something like that, I wouldn't get a pretty good risk to reward ratio. So what you could do here is to use the ATR for the stop loss. A label for this I also added to my 4 EMA trend indicator, and I set the stop loss now to about 1 ATR. ATR stands for average true range, and it is a volatility indicator. In this trade I also tried to line up the stop loss with the price level where we had many wicks. So don't expect price to go even more down, but of course it could. For the take profit I look to the left for a previous high, so I can start here with a risk to reward of 1 to 2. So let's play out the trade, and you can see we get a huge candle to the upside, and then we are winning this pretty fast, and if we stay in the trade to the close of this candle, we get a ratio of 1 to 2.8. Okay guys, that's what I wanted to show. I hope you liked it. If you do, then please don't forget to subscribe to the Trading Guide channel. If you have any questions, then add these to the comments and I try to answer as best and soon as I can. Follow me on Twitter and find my free indicators on TradingView. The link is in the description below. Thanks for watching, and I'll see you in the next one here on the Trading Guide.